Good morning, guys. Welcome to this Monday, May 19th. And we had a little bit of weakness in the overnight. And the headline I really found about it was Moody's downgrade. The downgraded US debt and bond market is not having a good day. They are down. So I guess it's dragging the market with it. So it's kind of an overall uh, wet blanket to get the day started, I guess. Anyway, the news we have coming into today. A ton of Fed speakers this morning, 8:30, 8:45. We have Bostic, we have John Williams. At 10 o'clock, we get e-commerce retail sales and leading indicators. That's 10 o'clock. Nothing at 8:30, but we had those Fed speakers at 8:30. And then we had in the afternoon, Lori Logan and Ned Kashkari speaking at 1:50 and 1:30. So, I mean, these Fed speakers, man, they're talking all the time. I mean, it's hopefully don't send any mixed messages or anything, which gets the market in a hissy fit. But at this point, the only news we have is 10 o'clock, e-commerce retail sales and leading indicators. And then we have all these Fed speakers lined up throughout the day. Tomorrow, we got pretty much a no news day, more Fed speakers, but not a whole lot of news. Wednesday, we get pretty light on news as well. Bond auctions. Thursday, jobless claims, PMI, existing home sales. Not a whole lot of news either on Thursday and Friday, new home sales. So fairly light news week, I think in front of us right now. To get started, though, is diving into this. So Friday, we had an interesting dynamic going on. We were up, 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 up. We looked like we had a really good shot up to this little mini attractor at the 59.60 to 70s here, and then late in the session on Friday, you saw what happened. Well, you didn't see what happened. You can split out Q period here for you to see that. It's to split out that Q. And that was like 10 minutes before the session closed on a Friday. The whole thing came apart like this. If that could have been the Moody's downgrade or something else, it could have been the Moody's downgrade that we hit at that time. But that was bizarre. It just absolutely sold off right down here to the from the 59.70s to the 59.30s, like 50 points right there in like a few minutes. So definitely something came out. Could have been the Moody's thing, could have been something else, but man, the Moody's I think is what's kind of leaning on the markets this morning, and we're kind of starting off with a bit of weakness. So tend to take it higher Friday and knocked right back down again, and that's where we are. So if I were a little bit cynical, I was almost thinking that was political, but you know, it's like anything seems to good. There seems to be some little curveball like that coming out from some institution, like a downgrade or some other stuff. They said just sometimes you just have to get your conspiracy. You had to take your conspiracy hat off and just take it for what it is, I guess. Anyway, the at this point, starting off range bound, I would say with a slight bias to the downside, given that they knocked it down that hard Friday and we have the overnight weakness. So starting off looking for a spot to cut off the selling at this point. Let's see if this was the buying cut off of the buying at 59.75s. And now we are backing off. It's entering that stage two most likely. Probably going to be, probably not going to see extensions to the upside today. I don't think so, but I mean, it can certainly turn around. It just depends a little bit on the bond market here and the general sentiment in the markets here. But I would start off with a slight bias today up to the downside. Looking to sell strength at this point against that 59.15s and the 25s for rotations back down. If they trade up about 25s, I'm back range bound, almost starting to lean back on the long side, but I'm back range bound for sure. So I'm taking off that short bias if they trade up above 59.25 again. And if they run down and start testing the lows, then well, we're back looking at the potential spots to cut off the selling in that stage two. I thought we almost had that going here earlier on earlier on last week, but that was they just took it higher for 2 more days into Thursday, Friday, and then now we are maybe found the spot to cut off the buying on the way up here. So this big move out of the middle on the ES looks like they cut it off finally. So this big move out of the middle, cut off the buying here at the 59.75. Now we'll see where they're going to cut off the selling before we find a spot to start building value. So that slight bias you start off with. Not a super strong one, but a slight one. So looking to sell against the 15s where we are right now and the 25s. Above 25s, take off the short bias, go back range bound, and starts trading higher. I would say above the 59.40s, I will be back on the long side again. So I wouldn't go right away from the 25 to the long side, but maybe give it a little bit of space in case they try to run it back and forth there. But if they start getting up above the 39.40s here, then yeah, start leaning in on the long side again and see how far they can take it. And on the way down, as I said, I'm still looking to buy against support at the 58.90s. Well, we have in 5900s, 58.90s, oh, no, 58.95, 93, 94, the 885, 58.85. 75 down to the 65s here for rotations back up. So all those are potentially buying opportunities if they start pushing this lower. And I would look for below the 65. Well, yeah, then we're going to be retracing a little bit further. So I mean, I would lean in on the short side a little bit harder. Probably below the 75s here with these big ledges. I would start leaning in on the short side. Last one I would look to buy against is that 65 level. You see down there pushing the lows, and I think we may be having a pretty bad start of the week. So starting off with slight bias to the downside, look to sell against that 15 and 25s. If they trade up above 25s, take off the short bias, go back more range bound, and above the 38 to 40, start thinking about the long side of the market. And on the way down, look to buy against that 59.05s, 58.93 to 94. 85s, 75s, and below 75, start thinking about the short side, and below the 65s, our bets are off at that point. So we'll see what this day turns into be. So far, they've been trying to retrace a little bit here going into the day session, but we'll see if they can lift this any higher. All right. I mean, the Moody downgrades, I'm not sure how big its impact is going to be. Maybe on the interest rate requirements, and that's kind of what we're seeing in the bond market. So I'm looking at the 30-year interest rates going up with a pretty good clip. So I've taken out that down here, taking that, testing these lows. Not a good sign. They're down here testing that low right now at the 11, 15, 16. So well, right now it's at 20, but you have this 15 to 20 support area, and if they take that out on the bonds, well, we're going to be heading lower, yields are going to come up. We'll see if this is a one-off, if this is just an overnight reaction or not. See how big of an impact that Moody downgrade is going to be. But they downgrade the debt, it's going to be higher interest rates on it, or higher rates required to compensate for that additional risk. Now the question is really, as I said, I put on my conspiracy hat. Is it that a political thing or not? Because I didn't see anything about the debt situation changing anything. It's been as exactly as it is, except that now we have people actually trying to solve the debt instead of just flat out printing money and spending. So kind of surprising that they would start to do a downgrade like that. Anyway, the trade the bonds from the short side to get started. Look to sell strength at the 112, 1130 to 112s, the 1205 to 6, up to the 12, 15, 16 here. So if they start trading above that 15, 16, I would be back on the, I'll take off that short bias. I would be back about that ledge right here, that's like 15, 16. So they can trade up above that. I would take off the bias. If I fold this guy together, you can see that we are starting to look like a better distribution, and we are buying right down here, testing that low right now. But I'm still watching that ledge right here where the value area ends. If we can get up above that into value again, then yeah, I'll start thinking about retracement. But if they start taking out that low, well, then I think you'll see a bigger reaction, probably more weakness in the stock market. So we're in territory now in the bond market. We can get a little bit gnarly. So. But this is a definite reaction on that Moody downgrade. So that's where we are on that. You can see how the bond market just took a dump here on the Friday afternoon. Actually, look at that. That is your downgrade reaction. So yeah, bond market reacting to that Moody report. So I would say from the short side, if they trade up about 112, 13 to 15, take off the short bias, but stay on the short side right now this morning. And NASDAQ, the same story there, also getting hit. Of course, getting hit worse because it's so volatile. And we are back to this attractor at the 200 to 20s. And let's see, right now they've been backing off pretty good. So, and as you can see, they're already taking out that low from back last week. So this is like the Thursday overnight. There was that low that we thought they were backing off in stage 2, but no, they extend a little bit further. Now they're right back and then some. So they're retracing these single prints right now, and they can retrace quite a bit, all the way back down here to the 760 to 800. So that's how far they can go if they start retracing it. So that would be a little bit more than just a stage 2 retracement. That would be more a change in direction almost. So we'll see how weak it's going to get, but we have a pretty good ledge down here at the 21,000. This general support there. It's on the way down, and I would probably lean on that one to get started. So they back off further than that, further than this level down here at the 21,000s. I would hop on the short side at that point. But they initially looking to buy weakness, or sorry, looking to sell strength is probably the way to say it. Given that we have overnight weakness, and let me see, sell overnight strength against the 190s, which we are trading on right now, the 230s up to the 280, 290s. So these 3 levels. I would give it one more level up here before I take off the short bias, just because it's so volatile. So against the 190s, 230s up to the up to the 290s. Look for short setups, rotations back down, and if they can take out the 290s, I would be back range bound. And if they for some reason get up above the 420s again, I would be back on the long side again. So that's kind of how I'm looking at this. So looking for short setups against these upper areas, but just not as aggressively. Right? If they start trading higher here and they take out the 290s, just take off the short bias, still look for shorts against the 330s, 370s, 420s, and above the 420s, start thinking about the long side of the market, because something is happening at that point. But initially, we are looking for further weakness, see if they can retrace this whole thing back to the 21,000 or not. So looking to sell strength early on up to that 290s, and then we'll see above 290s take off that short bias. So that's how we get started on the NASDAQ. Now finally, oil and gold. So oil and gold. Gold is just kind of holding where we left it. They retraced a pretty good move to the downside. And let me see, where's my capital flow on gold? Yeah, the couple of weeks here, we're going to be rolling gold to the August expiration. But we had a pretty good move up higher here on the up to the 330s. We are probing pretty down low here in the overnight going into Friday, and then there's to retrace this all the way up here. And the overnight, and right now it's been trading around this high volume area at the 32, 30 to 40s. So I would start off range bound on gold. If anything, I was almost leaning to the long side given this big retracement we had on Friday, and see how far they can take it. But they are trading at an attractor right now. So I would look for short against that 3250s, 3255s, maybe up to the 3260s initially. And if they start taking out that 3260s, which would be that nice ledge up here, then I would stay on the long side. But I would start off on the long side, looking for shorts against the 50s, 56, and the 61s, 62s here for rotations back down. And if one of them holds, we're probably heading right back down to that 3240s, the attractor area. If they take out the high here, that 3260, 62 resistance area, then I think we are on our way higher, and I will stay on the long side at that point. So that's gold. And then finally oil, not doing much. They've been pretty much holding in this range right now. So I'm find my capital flow on oil. and we are trading July oil, and we are pretty much holding around this attractor at the 62 area. So range band oil trading around this attractor. If I fold this guy together, you can see that this distribution is coming together fairly nicely. And if I fold that together, you see that you have a nice mode here at the 62s. So that's where we are, and we have a pretty good area to start to work. We have the lower edge of value right now at 58 or so, and the upper area is at 63, 64, 63, 64. So this is starting to become a nice distribution, and they're holding here right now. We'll see if they can keep pushing this lower, and they will. The prices will go lower, just not in a straight line, you know. So start off range band on oil, look to sell strength initially at 61.70, 62.10, 62.40s up to the 62.80s. Look to buy weakness, 61.20, 60.90, 60.50 down to the 60.20s for rotations back up. So that's like 3-4 levels down, 3 or 4 levels up, and just trade that in a range. And if you start taking out the third level at this one, 62.50s or the 60.50s, if you start taking out any of those edges, you can start looking for the directional move, but then look for one more level on each side for potential failure. All right, so that's oil to get started. Gold, so go range bound gold with a slight bias to the upside. Range bound oil. The ES and NASDAQ, we start off both of those with a slight bias to the downside to see if you can further extend. And the bonds definitely starting with a short bias. Let's see how that Moody downgrade is going to impact the markets today. All right, so we'll wrap it there, guys. Good trading. And let's see how this week, fairly light news week, comes together. I think Memorial Day is coming up next Monday. So we'll touch on that when we get closer. I think it's a regular close on Friday, but next week, and I believe it's Memorial Day. I had to double check that, but I think it is. All right, guys. Good trading, and I will see you guys back at 11:30 for the next update. Later.